Hello, Derek. Thanks for joining.
Yes, morning. Sorry for being a minute late.
No worries. Thank you very much for being there. You're right on time. And we are already live, so we're already welcoming some listeners today.
Great.
And before I hand over to you, Derek, I would like to give a quick word of introduction about this session, which I find extremely exciting, because we will be talking about wheeling. With us today, Derek Cutter, co-founder and head of sales at the NOA Group. And the topic of the day is really something which is very, very hot and important in our African solar industry. This is wheeling, and how the concept of wheeling and the commercial approach of wheeling helps to achieve net zero, not only in South Africa, but also elsewhere in the continent. And before I hand over to you, Derek, I'd like to say quick words of introduction about you for those listeners who might not know you yet. So you have more than 20 years of experience in strategy consulting, in investment banking with Bain, Deutsche Bank, Sanlam Private Investments. But if that was not enough, you're also what I feel comfortable saying, a serial entrepreneur. You've founded various ventures, among others, Energy Partners, Whole Moon Holdings, and Vertex. And one of the things that struck me, and that's probably also very well aligned with your background in the presentation today, is that for those listeners who know about Green Cape, you've also helped set up the Green Cape Finance Desk. So that's a whole lot of background and great experience to be talking to us about your new venture, which is NOA Group, which you have founded and where you are the head of sales. So without further ado, I hand over to you. I'm going to give you the controls so that you can share your presentation. And we are all ears. Thank you very much for joining.
No, thank you very much for the opportunity, John. I'm assuming you can hear me clearly.
Absolutely, yes.
Morning, everybody. Thank you very much for joining this presentation. As John said, the topic is wheeling, a progressive model towards net zero goals. I'm going to try and keep as possible, sort of set the scene, what wheeling is, how wheeling works, and what is possible. From a wheeling perspective, the presentation will unfortunately have a bit of a South African focus. That is where we are most active, and that's where we are most familiar with the wheeling framework. That is not to say that it's not possible in the rest of the continent. I think several countries are quite well advanced in terms of setting up their wheeling frameworks. But I think it will be quite similar. So hopefully the principles will apply broadly, but the focus of the presentation will unfortunately be mostly on South Africa. So maybe just on the first slide, what is wheeling? And I'm assuming many people on this presentation will already understand what wheeling means, but wheeling is effectively the provision of renewable energy, I suppose any energy, from distributed generation assets using the transmission grid, in this case Eskom's grid, and delivering those electrons to clients. So it can be a bilateral, where you've got one wind or one solar asset, you wheel the power to a specific client or off-taker, or it can be a many-to-many model, which I'll get into in more detail, where electrons from a variety of sources are wheeled onto the grid, and the client on the other side receives a blend of these electrons. Again, the national utility needs to be a party to this, and in South Africa specifically, wheeling, Eskom has opened up the grid point recently, so they've increased the ability to wheel onto the grid, which has led to quite interesting opportunities for private sector companies. On the next slide, stating the obvious, but I think South Africa and Africa are quite blessed with excellent solar and wind resources, and we can therefore generate renewable energy at quite attractive costs and volumes. And again, that is the framework, that is what wheeling enables is generating renewable energy from both wind and solar assets and wheeling the green power, so to speak, to clients. So quite an attractive model. And again, I think as a continent, we are very well placed to take advantage of this model. Just looking at a specific example to give the audience a bit of a flavor of what's possible. This is an actual client example we used, and I think it will illustrate the point quite well. So if one looks at the black line at the top, it's in this instance the customer load. So quite a big smelter, and you can see that they've got a constant load throughout the year. Now, if you want to wheel power to a client like this, I think one of the limitations is you've got to size your generation facility accordingly. You don't want to over-generate, because then the client will have to pay for electricity that they did not consume. So the black line is a bit of a limiting factor in this instance. And you can see on the top graph, in a typical summer week, the yellow peaks, that's what the solar facility in this instance generates on a Monday, Tuesday, Wednesday through to a Saturday. And the bottom graph shows the same solar facility in winter. Obviously, in winter, you've got not as much sunshine as in summer. So you can see the solar peaks at the bottom graph is a bit lower than the one at the top. But if you combine these two profiles, just by wheeling solar energy to a client, you can get to about 30 to 40% of this specific client's load. If you go to the next slide and you start overlaying wind, it starts getting a little bit more interesting. So you can see in this instance, we've got the same black lines, the same load profile of the client, but the blue parts of the graph is where you start overlaying wind with solar. So in this instance, again, the limit is not, you don't want to over-generate for the client on an annual basis, but you can see that the solar profile drops a bit. So you provide the client with less solar in this instance, but the wind fills in those gaps at night where the sun doesn't shine. So by adding wind to this profile, you can get quite a lot closer to the client's load, especially in winter, but you can also start filling up the nighttime load with wind electrons. So by combining solar and wind assets, in this example, you can get to about 70% of a client's load by using a combination of wind and solar. So it's starting to get quite interesting. On the next slide, in South Africa specifically, Eskom allows for monthly reconciliation. So at the end of the month only, Eskom will come to us as a generator or an IPP, and they will ask us to give an indication of where those electrons went. And that allows you, at the end of the month, you can allocate, you can see at the bottom graph, some of those peaks that are quite well above the client's load, you can drop into the valleys, so to speak. So Eskom, again, it's on a time of use basis. You've got to make sure your generation and the client's demand match on a time of use basis. But by doing a monthly reconciliation, it allows you to size your solution to a client even more aggressively. And on the next slide, in this current framework, you can probably get to well over 90% of a client's load from renewables. So again, when one thinks of net zero commitments, this clearly gets you a very long way towards those goals. As I said, at the moment, this is an Eskom case study. So not sure what other countries, what frameworks they use, and again, this might change at some point in the future. But for now, this is the current framework in South Africa, and we obviously encourage clients to take advantage of the opportunity to enter into a monthly reconciliation regime. On the next slide, I think everyone wants to know what the pricing is, and as much as we hate saying it depends, it really does depend. So the way certainly NOA's pricing works is there are a number of variables that impact the pricing. And the discount can be anywhere from 10% to north of 50%. Some of the factors that need to be taken into consideration would be the exchange rate, the volume of the PPA, the tenor of the PPA, clearly the site economics as well, and then whether a client would want the renewable energy credits or certificates or not. So depending on those levers, the actual eventual pricing is set. Just looking on the next slide, what it will actually look like in practice. So a client will still receive a bill from Eskom as per normal, and in this instance, you can see on the top there's several charges, but the client's bill in this instance would be 6.7 million rand. At the bottom, Eskom will then, based on what the IPP tell them, they will determine how much wheeled energy is provided to a client. In this instance, it's 3.5 million kilowatt hours. There's an Eskom rebate that I'll get into, and there will be a wheeling credit on a client's bill. There's a wheeling admin cost in this instance of 23,468 rand. So this will be the only additional cost to a customer. And ultimately, the client in this instance will get a wheeling credit of 4,395,509 rand. So the client's bill from Eskom would be 6.7 million. After deducting the wheeling credit, the client will get an Eskom bill of 2.3 million rand. Just on how this is calculated on the next slide, thank you, John. Eskom have set WEPS rates to calculate the wheeling tariff or the wheeling rebate, and that is based on peak, standard, and off-peak periods, and for high demand and low demand season. It's not the same as the normal Eskom charge where they take into account transmission zones and voltages. It is simply a fixed amount per time of use period, depending on the demand per that specific period. So that is how Eskom determines the rebate that I showed you. And then on the next slide, what this will practically mean for a client is a client will effectively get two bills. They will get their normal Eskom bill with the rebate on it. So again, just in this example, the Eskom bill will be for 2.3 million rand. NOA will then send a bill to the client for the same amount of kilowatt hours. You can see the 3,554 is the same amount that appears on the Eskom bill. Then there's the NOA tariff as we described, based on the parameters that I listed earlier. And in this instance, the client will receive another bill from NOA for 3.28 million rand. And on a combined basis, the client in this example would have saved 16% of their energy bill, and they would have achieved 95% renewable energy coverage. So that is what it practically will look like. This is, I suppose, the carrot. On the next slide, there is also a stick, and this is where carbon and carbon costs come into play. And again, I think this is specific for each industry. But as you can see, I mean, the EU have launched their carbon border adjustment mechanism. The SA Carbon Tax Act, the exemption is coming to end in 2025. I mean, it's unclear exactly what will happen, but I think it is clear that there will be a cost implication. And as John mentioned, I think quite a few companies have made quite significant carbon reduction commitments. So we think that, again, wheeling provides a really good opportunity for clients to A, save electricity costs, B, avoid carbon implications, but also C, to meet their commitments. At the moment, there's no carbon neutral product available from Eskom. So this, we believe, is a very good tool for the commercial and industrial sectors to achieve their carbon goals. Maybe just getting into NOA a little bit and giving a flavor of what NOA does. So NOA's main shareholder is AIM. AIM is the infrastructure arm of the Old Mutual Group, and they've been very active in South Africa's renewable energy industry since the inception of the REAP program. They've invested in over 30 renewable energy projects, totaling in excess of 2 gigawatts of generation capacity. And they are the main equity holder in NOA, and they have seeded the NOA platform with equity capital to go and build out our platform. NOA's model on the next slide is predicated on 4 building blocks. The first building block is we follow a many-to-many model. As I described, we think there's a lot of benefits from getting your electricity from a portfolio of sites. Hopefully the wind blows somewhere and the sun shines somewhere, and by aggregating generation resources I think one can provide clients with much more certainty in terms of electrons, but also with a much bigger penetration percentage of electrons. Again, the sun shines at certain parts of the continent, certain times of the day, and then the wind, again, is a real good supplement for when the sun doesn't shine. We also aggregate on the client side. So we follow a portfolio approach on the client side as well. And what that allows NOA to do is we don't have to enter into bilateral PPAs where the offtake and the generation have to match perfectly, but we can offer clients short-term PPAs from as short as 3 years up to 20, 25 years. And we can also offer volumes without having to take up the entire, for example, wind facility. So you can sign PPAs from anywhere from 1 megawatt, I suppose, to north of 200 megawatts. So we believe the portfolio, the many to model, has got several advantages. As I mentioned, the second building block is then very much diversification, both from a geographical point of view and a technology point of view. And again, that is just to make sure that you can provide a client with as big a percentage of his ESCOM or of his electricity bill as possible. That allows us, as I mentioned, to be quite flexible in terms of PPA tenors, security packages we require, and also PPA volumes. And then maybe just the last point, with AIM as our shareholder and supporter and Standard Bank as our debt provider, NOA is able to provide clients with bank PPAs. So the portfolio effect allows us then to take a view on specific clients and take into account client-specific balance sheet limitations and be hopefully quite competitive in terms of termination requirements from clients. On the following slide, to just summarize some of the benefits. As I mentioned, we believe that the many-to-many model offer clients significant flexibility in terms of tenor, since there's a pool of off-takers. Again, I mentioned the high penetration rate because of the portfolio of sites, which allows you to displace a bigger portion of ESCOM energy and also allows you to contract for smaller amounts. So like I said, for example, 10 megawatt of wind or even less than that would be possible. And then the last point is on the security. Because the portfolio gives protection, I think we are quite comfortable to deal with clients who might not have the requisite balance sheet or security available to enter into these types of arrangements. I think that is more or less what I wanted to share with the audience. John, very happy to go into more details, but obviously also very happy to answer any questions that the audience might have.
Thank you very much, Derek. This is quite a powerful presentation. Really, thank you very much for it, because it's you went straight to the point, information-rich presentation. And this is very much appreciated, because I know this is what the listeners also like. I have some questions for you. I see there are some questions already submitted, but I do have some questions for you. You mentioned several times about the many-to-many approach, yes, being able to connect different projects to multiple off-takers. Are you currently already doing wind and solar and maybe even some other technology? Yes. And how is that working for you?
Yes, so I think you've probably gone to one of the more tricky questions right up front. So thanks for that. I think one of the challenges in this space is obviously in South Africa specifically is just grid availability. These are infrastructure projects. They take a while to build, and you cannot start building before you've got clients in place. So as much as we are very active in front of clients, the soonest you can probably expect electrons will be in 18 to 24 months from today. For NOA specifically, and again, this is maybe a bit technical, in South Africa, you require a budget quote from ESCOM, which basically gives you your allocation to the grid and which allows you to enter into contracts with EPCs and really start constructing your sites. We have got budget quotes on 2 wind sites, so we are ready to proceed with about 250 megawatts of wind sites, which we have budget quotes for. On the solar side, we've got 650 megawatts of solar sites that are in the ESCOM process, in the final parts of it, and waiting for their budget quotes. So where NOA sits at the moment is we are ready to contract and engage with clients on about 850 megawatts of electrons, as I mentioned, of which 250 megawatts are wind electrons and 600 megawatts are solar electrons. And we keep on adding to our portfolio. Again, as we get demand on the one side, we've got close partnerships with a number of really strong developers, and then we enter into agreements with generators. Our model allows us to buy electrons from PPAs through our trading entity, or from IPPs, I mean, or we are also, our model is geared towards building and owning and operating our own sites. So ultimately, we'll use both, where we can satisfy. Ultimately, we want to focus on the client and satisfying the client, and where we don't have the sites to deliver those electrons, we are very happy to partner with IPPs and enter into long-term PPAs with them and provide those electrons to the client through the trading entity.
Yeah, very clear. I'm being bombarded with questions here. Questions about guarantees from different people, among others, William. What is the guarantee that the Eskom fee will be maintained over time? Isn't there a risk, for example, that they tell you one price today, but that they change their minds later on for any kind of external reason?
If I think I understand the question, so I think there were two parts of the question. I think in terms of the guarantee required, ultimately we replace Eskom. So we will be an IPP that sells electricity directly to our clients, and we have certain guarantee requirements. So depending on the client and the client's risk profile, we will require both a payment guarantee, which is a short-term liquid guarantee, but then also a termination security. And I think the big risk for us is that clients terminate for convenience. When it comes to business reasons and clients, 20 years or 25 years is a long time, we're very much more flexible in terms of termination for business reasons. Obviously, the first mitigant is just to sign shorter PPAs. I think if you know you've got business risks or end of mine, life type opportunity issues, just sign shorter PPAs, for example. But anything can happen over a 20-year period of time. And again, I think if termination for business reasons happen, we are quite flexible in terms of the security we require from clients. In terms of Eskom, I think Eskom are very committed to the wheeling framework. I think they also realize that wheeling can really contribute significantly to the challenges, specifically in South Africa, we have in terms of load shedding. So the Eskom processes are very well in place and entrenched. Again, over time, wheeling charges and the like might change, but we think the value proposition to a client is so attractive that it won't really impact the value proposition to a client significantly. We see the cost of renewables definitely coming down at a faster rate than the cost of alternatives will go up. And ultimately, we think the savings will increase over time. Again, if some of the wheeling tariffs increase, I think that is fair enough, but we think the economics are certainly attractive enough to absorb any changes that might come in future.
Fair enough. We have a question from Frank, who seems to be quite familiar with the wheeling situation in South Africa. I'll read his question. With Eskom now asking for full PPA certainty / offtake to receive a budget quote and grid access, how are you able to maintain a certain level of flexibility in your negotiation with your offtaker? Isn't that limiting you?
Yes. So I think we are in the fortunate position that we've already got quite a strong portfolio of clients who have committed to PPAs. So we have got sufficient PPA demand, I suppose, to make sure that we get the budget quote from Eskom. So I think the first point is to ensure that we've got grid capacity and the budget quote. And like I say, our big clients have supported us with PPAs to ensure that we've got, for the 850 certainly that I mentioned, that we have got sufficient budget PPAs to get the budget quotes issued by Eskom. Where it then becomes interesting, adding the new clients is quite easy because I think that's where the portfolio effect comes into play. And again, you can then allocate a certain percentage of your portfolio to these clients, and some of the clients that supported you in terms of the PPA process might then just get a smaller allocation, so you can allocate some of the other electrons to other clients in your portfolio. So again, I think that's where the portfolio effect and the many-to-many model really becomes valuable. It allows you then to add additional clients to your portfolio.
Then we have two questions, a little bit similar from Nyasha and from Alexandros, which seem to be a bit more skeptical. Hello.
So this is my colleague, Ty.
Hi, everyone.
Hello, welcome. Nyasha and Alexandros seem to be a bit more skeptical about the reliability of Eskom. Eskom hasn't necessarily been in the good news in recent times. And they're asking the question about operational and delivery risk on one hand, and also what happens in case of load shedding.
Yeah, so maybe let me answer the second question earlier. So I'm just going to get the sun out of everyone's eyes. I think in terms of load shedding, wheeling does not offer any mitigation against load shedding. If the grid is down, there won't be any wheeled energy either. So there's no solution from a wheeling perspective for load shedding. I think in terms of Eskom's reliability, we haven't experienced that at all. I think they are certainly very capable and very smart people at Eskom. Eskom are very committed to this wheeling process. All our interactions with Eskom has been very positive. I think as long as there's grid, which I think, again, I don't work for Eskom, but I think the grid is quite strong and quite stable, and we are very confident that we will be able to use the grid to deliver these electrons to our clients. Again, in terms of from an administrative point of view, administering wheeling and making sure the wheeling credits appear on a client's bill. Again, I think Eskom have really put in place quite a robust system, and we don't foresee any Eskom risk when it comes to wheeling. And
if I may push it a little bit further, in case of load shedding, do you then have a take or pay agreement with your off-taker? Is that the risk carried by the off-taker, or is it a risk carried by you?
No, it is a risk carried by the off-taker, but we size, so when we engage with clients specifically, we size our solution very much to their demand profile. So we work closely with our clients to ensure that whatever PPA they enter into matches their load profile, and that load profile takes into account load shedding. So we will certainly not size it 100% to the maximum demand, because in that case there will be overgeneration and there will be a take or pay component. However, given the portfolio effect, we can always allocate electrons to other clients in our portfolio to mitigate, well, firstly, allocate hopefully to other sites in a client's portfolio. In the case of load shedding, again, I think not all sites are being load shed at the same time. So we can allocate to other sites within the portfolio. Failing that, we can allocate to other clients in our portfolio. And again, at the moment, the monthly reconciliation provides another nice mechanism for allocating electrons when there is load shedding. But ultimately, I think the trick here is to size the solution appropriately to avoid deemed energy payments.
Jonathan is wondering, so you've explained that you are mostly focusing on South Africa right now, but what about other regions? Is there a possibility to do cross-border transactions? And then maybe my additional question about NOA specifically, are you focusing in the future extremely on SA, or could you be applying the same approach in other countries across the continent?
No, absolutely. So AIM, as our shareholder, have got a Pan-African mandate, and they're already quite active on the continent. NOA similarly has got a Pan-African mandate, and we are very, very keen to build a Pan-African business and get involved on the continent. Our business at the moment is still quite young, and we feel that the opportunity in South Africa is the right one to tackle at the moment, but we are certainly looking to add capacity to our team to enter into countries where wheeling frameworks are in place already. There's also the SAP trading pool, which is already allowing us to wheel power to other countries on the continent. And that is certainly something we want to participate in. For now, I think, the focus is on South Africa, but that is more a timing and a capacity issue. As other countries, as their wheeling frameworks become more established, and I think some of them are already, and as our team becomes more established and our capacity increases, we would absolutely build our business north of the borders of South Africa. So it's a question of when, not if.
And then specifically to Jonathan's question, if I understand correctly, is it legally and technically possible to do a cross-border wheeling project? Or if you are going to another country, you would have to install a plant in that country?
No, it is possible already. There is the SAP trading pool. Now, I'm not an expert on the SAP trading pool, but the countries that are in the SAP trading pool can certainly wheel to each other. And I know countries like Namibia and Botswana, Zambia, Zimbabwe, there might be others, are part of the SAP trading pool, and it is already possible to wheel between countries. I think the specifics of the SAP trading pool will determine what is possible. I'm not an expert on that, but it is definitely already possible to do that as far as I'm aware. NOA is not involved with that at the moment. So like I say, my expertise is not that up to date on the SAP trading pool, but it certainly is possible at the moment.
And continuing on this continental look, do you, on the top of your head, have an idea of the countries that already have a wheeling framework, an application on sub-Saharan Africa?
No, I mean, I don't. I mean, we were at Africa Energy Forum in Nairobi during June, July, and I know that there are a number of countries who are well advanced. I know there was quite a strong North African focus at AEF as well. Countries like Morocco and Egypt were certainly well represented there, but I can't speak with any certainty on what's happening in other countries. But I know that there's a lot of progress and activity, like I say, certainly in Southern Africa in the SAP trading pool. Again, in North Africa, I know there's quite a lot of sophistication. I'll be very surprised if the big countries like Kenya and Nigeria and other economies aren't quite well advanced in this as well, but I don't know the specifics.
That was a question from Kala, and if I may add to this, this is the kind of information that you may find in our annual Outlook report. So it will be updated because there's quite some development on that front, as you were just mentioning. But yes, we have already identified a few countries with wheeling frameworks being applied or not yet, because in African countries we often have the situation where there is a rule and the application of the rule. But yes, this information could be and can be found in the annual Outlook.
Well, there you go. You should have answered the question for me rather than put me on the spot, John.
But this is your event. This is not my event. Continuing with the questions, I mean, this topic seems to create quite some passion. There's a lot of questions about de-risking. Definitely, we've already addressed a few of them. And maybe I would like to ask you through a different angle. You mentioned several times that you are able to provide a relatively short-term PPA. Now, anybody else who's tried to develop a traditional project knows that it's very difficult, for example, to provide a PPA to a mine where the remaining life of the mine is uncertain. So how did you manage to convince your IC to be dealing with short-term PPAs and unknown tenures?
Yes, I think we've been very lucky in that AIM, as our shareholder, are very familiar with infrastructure investments. They are certainly very familiar with the REAP and also with the wheeling framework. So I think as an equity investor, this is an asset class they understand really well, and an asset class that they've got deep experience and exposure to. So I think from that perspective, I think AIM really saw the wheeling opportunity and understood that a different type of approach needs to be followed in the case of a C&I market, like you described, not a bilateral, not long-term offtake, Similarly, Standard Bank as our lending partner, I think are very, very well familiar again with the infrastructure market in South Africa, and they've been certainly very innovative in terms of understanding what is required to service the C&I market. So I think the combination of AIM and Standard Bank and really working very closely with them to understand our model and what clients require has been extremely helpful. And then ultimately our model, because we are quite capital, we've managed to secure significant capital, we can sign as NOA, we can sign bankable PPAs. So given the capital on our own balance sheet, the banks are comfortable that we can sign a bankable PPA, and then it's up to our internal risk allocation frameworks to ensure that we've got enough 3-year, 5-year, 10-year, 20-year clients or off-takers in our portfolio, and that the blended portfolio gives us enough certainty in terms of tenor, in terms of volumes, and in terms of credit risk. So it really then becomes an internal risk allocation framework to ensure that we are happy to stand behind these PPAs. So I think it's a combination of various factors, and it's a moment in time. I think, wheeling is what's made this possible, and prior to Eskom lifting the caps on wheeling, this wouldn't have worked. So I think this model just wasn't possible 2 years ago. And in any crisis, I suppose there's an opportunity, and specifically load shedding, I think it's really accelerated our ability to roll out this business model.
We've spoken a lot about Eskom, about the grid, and about you. What about the clients? Nyasha, for example, is asking, what is your typical security requirement from an off-taker's point of view? How do you handle that side of the
Yeah. I mean, I think the whole industry is really trying to remove friction points as much as possible. I think when we started speaking to clients, the typical security requirement was 6 months of payment security and 3 years of termination security. I think that, again, as the banks and as the equity providers and the DFIs become more comfortable, this is already being driven down quite aggressively. So I think at the moment, the industry standard has gone from, in terms of payment security, from 6 months to 3 months. Termination has come down from 3 years to 2 years. But again, this market moves quite quickly, and I think there's already movement to further relax the security requirements. I think in NOA's case as well, I think we've already moved quite significantly from that. And again, our model is very much client-centric. So we like to sit with the client and to really determine where the pain points are. And in cases where there, for example, is not a balance sheet that can provide any termination, we've got solutions around that, either by adding a few cents to the tariff or some sort of a lockbox approach, or there are many creative ways to really make sure that the termination is as, suppose, palatable as possible. And again, we just see this being driven down more and more. But ultimately, at some point in time, if you want to enter into long-term contracts, there needs to be some form of comfort given. So I don't think it will disappear entirely, but it's definitely already moved quite a lot since we've been active in the space.
Makes sense. And I'm looking at the time, and I see we've already gone slightly past the original time. So before we come to a close, I'd like to gently ask everybody who's been submitting questions in the chat box, please submit them in the Q&A section, because these will be recorded. There's many questions today, and your questions will be shared with Derek and his team after this event, because we don't have time to address them all today. So please take a moment to copy paste your question in the Q&A so that the team of NOA Group will be able to follow up with you. Derek, maybe one last question, still about the commercial aspects. Is there such a thing as a minimum offtake capacity for? I'm putting myself in the shoes of the listeners here. Maybe there are some business owners who are interested in this commercial approach. Do they have to meet a minimum electricity consumption to be worth your time, or how does it work?
No, absolutely not. I think I think again, the model is set up in such a way to service clients who can't necessarily take the entire 100 megawatts that a wind farm produces. So the whole portfolio approach is set up exactly for that reason. And I mean, at the moment, I think let's say a megawatt and above is certainly very attractive to us to engage with clients. Below that can also be a possibility, but no. So there's no minimum requirement. I don't think we want to wheel to a residential house necessarily, but I think when it comes to the C&I space, I think there'll be very few instances where we will say to a client it's too small.
Very good. And then one last question, maybe. You did not necessarily address the technical complexity of that trading and balancing of Eskom meter, your meter, everything being decentralized. Can you tell us a little bit about the technology that is being used? And is it mature? Is it still developing? How is the situation on that front?
Yeah, I think there are quite a few sophisticated technology partners and providers in the South African market, certainly already. There are also, I mean, I think this model is well established internationally. So I think there's quite a lot of international players that have already developed software systems and risk management systems that are in the country. So again, from a NOA perspective, we will look to partner with some of these providers to make sure we've got the right software in place, that it's got the right risk management tools in place. But I think, again, I think there's quite a number of sophisticated local software providers that have already built platforms. There are international players as well. So this is not the first time people are looking at this problem. And again, from a NOA perspective, the approach is to partner with people who've got the expertise in that area. So I think it is sophisticated, and again, I think as long as your internal risk parameters, I suppose, is the bigger issue. I don't think the software is going to let you down. It might be your own internal risk parameters that'll get you into trouble. But I think we are very comfortable with the sophistication of partners in this space.
Well, thank you so much, Derek. It's coming to a real close right now. There were so many questions. I feel particularly bad today because there were so many questions that we did not get a chance to address about Forex, about you potentially working with municipalities, yes or no. What I'll do is really, I invite everybody, if your question did not get covered, please take a moment to submit it again through the Q&A section. And meanwhile, before I let you all go, I would like to do a little bit of promotion about AVSIA activities as well. As you may know, we have our big annual investment forum coming up. It will take place in Nairobi this year, after Cape Town last year, from October 4th till October 6th. It's a real renewable energy event, so not exclusively solar, but we will cover green hydrogen, we will cover wind energy, of course, solar and storage, as well as electric mobility. So if you have a project, if you're looking for partners, or if you have funds and you're looking for partners, this is really the place you want to be at and meet a lot of potential partners. And then the other thing that I would like to tell you about is that at the same time, also in Nairobi, we will be celebrating our Solar Awards laureates for 2023. So it's going to be a big celebration, big networking event. And I really hope many of you will be able to join us there. And very soon, the 3 nominees in each category will be announced. And then the last thing I would like to tell you about is a little bit of new market intelligence resources that we've been building over the past few weeks for the AVSIA members. So we've been collecting a lot of data about solar across Africa for several years, and we've now really built it into a full-fledged dashboard, which is available online and always available, so you can slice and dice as much as you like. And it should normally help you to get a lot of insights into the reality of solar across Africa. And then the last thing, of course, be ready for our upcoming new version of the annual solar outlook. It will be published in January once again. So we have a few more months for this, but really I already quickly mentioned about it in the discussion today. There will be a lot of updates because of all the crazy developments we've been experiencing all across the continent this year, especially in South Africa, of course, but there's a few very, very active markets. So keep an eye out for this important document of the year. And this is it. This is it for today. Derek and colleague, thank you once again for joining us today. It's been really, really great presentation, great insights, and I look forward to being in touch again very soon. And good luck with all your projects, and have a great rest of the day.
No, I appreciate it, John. And we open, if anyone's got questions, I mean, please feel free to get in touch. We're very happy to engage with your audience. So thank you for the opportunity.
Thank you.
Thank you very much. Bye-bye.
Cheers,
See you soon.
Bye. Bye.
And for everybody else, one last time, if you have one last question, please now's the time to submit it in the Q&A section. And then we will make sure to send them over to Derek and his team. And other than that, thank you very much for all of you for joining today once again. It's always great to see so many of you.